For those who don't know me, my name is Chris Lustrino. I'm the founder and CEO of Kingscrowd. Something that we're really committed to here at Kingscrowd is not only teaching you and helping you navigate kind of the private equity and debt markets that we cover, but also helping you learn about other alternative investments that are out there across the full spectrum, right? Everything from real estate to private credit, so on and so forth. And so we do these kind of monthly sponsored webinars where we dive into unique opportunities that we're not currently covering and help you learn about those investment opportunities as well. So we have an awesome one for you here today. I've known Nash Roberts from Carofin for many years. They run a really interesting platform, which I'll let him tell you more about. And then we're joined by Jeremiah, who is at a company right now that is raising a debt round on the Carofin platform, and he'll be able to dive in and tell you all about the offering, what they're doing, how it all works, and why you might want to get involved, and really help you kind of understand as well, differences between doing kind of a debt offering in a company versus the more traditional equity offerings many of you are likely more knowledgeable on. So with that, Nash, thanks for joining us. Tell us a little bit about yourself and what Carofin is all about.
Yeah, absolutely. So my firm is Carofin, and we're an investment bank that is focused on small and medium business finance. And so we raise capital mostly for operating companies that range from venture stage technology companies like a SnippetSentry, which we'll be talking today, to somewhat more mature companies in the lower middle market. We're headquartered in Western North Carolina. I'm in Durham, North Carolina, although we've got about 15 staff that are sprinkled all over. And in aggregate, our firm has raised about $1.25 billion since 1995. The way we're structured, our parent company is called Carolina Financial Group. We own and operate two FINRA registered broker dealers, Carolina Financial Securities, which has been around since 1997. And then Carofin itself is a broker dealer as well. And there's a platform affiliated with Carofin. And really, the way to think about it is Carofin is our DBA. And so of the financings we've done, it's about 300 different discrete financings through Reg D private placements across about 200 different issuers. In terms of the companies that we serve, we're really more defined by what we don't raise capital for. So no genes, proteins, and molecules. We don't have any PhDs on staff yet. No cryptocurrencies. And then because we're federally regulated, no cannabis. But beyond that, if you look at the types of companies that we've raised capital for, it's a pretty wide variety of different industries. And then we can structure different security structures, whether it's debt or equity, which really depends on the circumstance. So that's a little bit about us. And yeah, and my role is in sales and syndication. So I speak with a lot of investors about the types of offerings that we provide. And naturally, I get pitched a bunch of different new prospective deals that need access to growth capital as well.
Nash, one other thing I want to make sure we kind of highlight is, something that I think differentiates from a lot of the kind of traditional equity crowdfunding platforms is, you guys really do kind of act more like an investment bank. And these are my words, not yours. I know there's, legal things can't say, but you really do help to work the deals and have a great network on your platform of people to kind of trust that you've really vetted each deal that you do. You don't do a million deals, you do a handful of deals each year and you do them really well. So that's just something that has always stuck out to me is that kind of more hand-holding approach of really helping these companies raise the capital.
Yeah, that's correct. I mean, one of the benefits of, when we're offering a round up to our kind of growing cloud of accredited investors, the bite size, the total amount of capital per deal ranges between, call it $2 and $5 million. If we're raising capital through a syndication, that's the scenario I've described, those are primarily passive investors. And so they're looking at us almost like an outsourced manager. And so part of the value that we bring to the deals that we raise capital for is you can't just place the capital and move on. And so if we're raising debt, we will embed ourselves as the administrative agent on the loan so that we're actually processing principal and interest, principal repayment and interest payments. And then we also serve really that outsourced, investor relations role because people just want to know, they want to put their money to work and, get updates from the company. And we work actively with the issuers to make sure that there's at least quarterly reporting on the status of the business.
Really powerful. Well, let's get into the issuers here today, Jeremiah. Thanks so much for joining us. Tell us about the company, what you all do, and a little bit about your background as well.
Sure. And happy to dig in really deep beyond this brief intro. Obviously, of course, here in a bit, but SnippetSentry, I'm the chief revenue officer with this small little startup that's growing rapidly. Uh, the type of good busy that keeps me busy every day in meetings like this. SnippetSentry is about a 3-year-old organization at this point. We entered the market with one mission and one mission only, to be the global leader in text message capture. It's a simple thing to explain in terms of what we do and what we offer and who we offer it to. It's a very difficult product to construct and deploy, especially at scale. And one country to the next can create all different kinds of concerns. So it's been a problem that's been kind of lingering out there for going on 15 years in various markets that we think we've presented a pretty sleek solution to.
And I think this
So
is
yeah,
just worth noting. I mean, more often than not, when we're raising capital for a company, we're not an end user of the product or service. But to be clear, in the case of SnippetSentry, we are end users. In addition to some of us are shareholders in the company as well. But this problem, that of capturing off what are called off-channel communications, is such a critical issue to the financial services industry. I mean, there's over $2.5 billion of fines from the SEC and FINRA that have been handed down since 2020, that this is a must-have for people that sit in my role that are communicating with investors, where an investor doesn't necessarily want to email, they want to text. Well, if you can't capture that information historically, when the SEC shows up and says, show me all your investor communication, you're going to get fined. And so this is a must-have application, which makes it a really sticky customer relationship between Snippet and its customers.
So let's talk a little bit more about the problem in this, text capture. So quite literally, you were making sure, like in inbox captures all of your emails, you were making sure that all of these communications via text are being stored and gathered as well. So in terms of the pain point, like as an individual, it's in your phone, you can see your text messages, right? Doesn't feel like, oh, I need to be a customer of SnippetSentry. Who needs to be a customer? You hit on financial services a little bit, but can you explain really the use case and the need for this?
Sure. Again, in terms of text message capture, a simple thing for a whole lot of people to understand, right? But uh, the parties that are most interested, where we decided, I guess, better stated, to prove ourselves and to prove the unique value of our platform, started within the regulated industry. So those who are under the careful watch of the SEC and FINRA and beyond, regulated groups in the EU and Southeast Asia as well. The idea being there's a requirement that all of these messages and all of, again, what Nash refers to as off-channel communications, be captured and stored. Uh, so not only do you need to be able to get the data from point A to point B from someone's device to an archive, but you need to be doing that in a manner that's wholly and entirely reliable, right? And so that's where it starts to get really difficult. Now, of course, there are all kinds of easy ways to do this. You can force users like brokers, independent registered investment advisors, and alike to use a privately constructed app that may be a governed app, for example, as you may have heard it called. And what that really does is take your text messaging application on your phone and wraps it up in some other technology. You log into that and then you text through that and your messages are captured. The only problem with that is human behavior, right? Human behavior makes that a really difficult thing to deploy. And in an environment like a publicly traded private equity firm that's got 37 offices globally and is managing multiple billions of dollars of assets, and hundreds of people are texting, to change the behavior of those individuals is a hill too hard to climb in more cases than not. And so what we offer in contention to that federated or governed application environment is native text message capture. So you don't have to change any behavior. What you do as an end
Yeah.
user is text via iMessages, right? We all use iMessages, and there's a few rogue Android users on this phone, I'm sure, and there's a whole lot of WhatsApp users out there as well. But the idea of getting those users what they need without asking them to change their behavior, download new apps, and change the way that they operate today was the missing piece in this space in regulated environments to start. Now, that quickly expands to the old notion of, if you go back to Drucker, of if you can't see, you can't measure it, right? And so on the sales intelligence side, there's a wonderful value proposition to revenue leaders like myself, revenue operations leaders, sales development leaders, for their sales representatives and prospecting team who are texting prospective clients to get this information into their CRM, where copy and pasting is the norm. And so a simple, again, concept to understand, that's a 10-year-old open ticket in HubSpot and a 7-year-old open ticket in the Salesforce environment. So these are problems that have been out there lingering for a very long time that have been left unsolved for all kinds of users, from registered investment advisors in a single office to the largest private equity firms and publicly traded investment banks around the globe, to that lowly old salesperson who's just trying to hustle some deals, and everybody in between.
So fully understand the problem now. Kind of amazing. It almost feels like that no one has done this, other than maybe the app players who've created a full app that you have to go text in. But as you mentioned, not really great for human behavior. What is the crux? You don't have to give it, but like, what is the crux to solving both the capture and storage of this information, and why it's been so complicated and no one's really done it to date, from what I can gather?
All right, I think of this, we create a lot of analogies here, but we liken this to a boat, right? The captain's chair of a boat looks the same. If you're looking at the same dollar amount, if you're looking at a yacht, the captain's area is going to look eerily similar. Many of the features around the boat are going to look eerily similar, but the difference maker in most is down in the engine room. And that's the sort of synopsis of what's been happening in our space, is that to build this technology that meets all of the requirements of all the stakeholders means it has to be dead simple, right? Because this in the end is really all about user adoption. You've got to get that absolute end user who's doing the texting to close a deal to adopt this. And so it's got to have a high user adoption rate without a whole bunch of help desk calls, which means dead simple, no change in behavior. You have to check box one. That's hard to do, right? Because it's native. How do you do that? 2, it's got to be absolutely scalable, both vertically and horizontally, right? So it's not just that I can go from 1 user to 10,000 user environments, but I need to be able to deploy 10,000 users today, right? Because a large investment bank comes in and says, I have 10,000 brokers who need to go live today, or I have 100,000 salespeople around the globe. The idea of being able to scale this up, also a difficult problem to solve, a la the engine room. And last but not least, again, it's got to be reliable. So we think of ourselves as world-class plumbers, right? No ego on the side of house. We have to get the data from point A to point B 100% of the time that the data needs to pass from point A to point B. And those 3 things combined, it's not any one of those individual items that's particularly difficult. All 3 of those combined in this space is extraordinarily difficult to solve. And I think that's why we've seen these sort of piecewise solutions come together and be deployed in the market that leave one of those 3 critical stool legs out, right? You end up with something that doesn't quite stand up to muster, whether it's scale or reliability or users don't adopt it. It's been one of those 3 things. So we solved all 3 of those, and we liken that to the engine room on a really nice boat where you really tell the difference.
So where are we in the journey as a business? How old are you guys? It sounds like you're commercialized. How far along are you in the commercialization process?
Yeah, we're again about 3 years old. We really went hard into the market about 2 years ago, to be honest, right? So it's a private beta for an extended period of time that was invite only. We happened to get our teeth cut and our swords sharpened, if you will, by some A-level private equity firms right out of the gate, who expressed sincere interest in our approach and aligned to the way that we were doing things right away. So that allowed us to get out of that beta pretty quickly and move into the market. We've expanded over the most recent, let's call it 12 to 15 months, from about 48K in ARR to about 2 million in ARR. We've grown by about 40x in terms of the number of users. The expansion has been sort of overwhelming in the sense that we knew we were onto something with the way that we do things, and we care about those three stool legs. The
Mhm.
response from the market has aligned to that very nicely. Again, over the last 12 to 15 months or so, we've been able to get our brand out there and establish ourselves, because what really matters in this space is trust, right?
Mhm.
I need the chief technology officer, the VP of infrastructure services, or the chief compliance officer to be able to turn to the next person and say, yeah, we're using Snippet to solve this problem. And the bridge that builds is strong in terms of a referral opportunity for us. So we leverage that quite a bit, and that's what's helped us grow exceedingly well over the last 12 to 15 months. As we've sort of established ourselves in the governance, risk, and compliance space with that suite of products for GRC, and built this sort of baseline level of revenue that's proven that our technology and our approach works. We've expanded separately into the sales intelligence space, which is a net new market for us to really be breaching, but it's a much larger total addressable market for us. So new, it's in a private beta today. The response has been uh, great. This smile on my face is earned by the calls that we're getting. So GRC side and the governance, risk, and compliance product, again, about 2 years old, well established. We're in triple digits in terms of number of customers, and we're growing month over month at a rate that'll make any VC on this call smile. SI, the sales intelligence side, is the next big wave of growth outside of regulated environments that we see for ourselves.
Yeah, something I've learned over the years, right, is when you're selling into large financial services organizations and whatnot, they don't always go all in up front, right? They want to actually make sure it works, they have a good experience, it does what it's supposed to do, and then they'll talk about scaling up with you. So with those clients, and I've heard a few names, and I'm not sure if you can share them here as well, but I'm sure you started out with a small user base. Even just within your client set, how much room is there to run and scale up? And how long will that take to really, cover 100% of an organization that you're working with?
So, smart question. As we look at our portfolio of clients, about 40% are within striking distance. We will call it the forecast range. So 95% or so of what they stated would be the number of end users they forecast on the platform. We see them hold pretty steady in there. Users come and go, right? Employees come and go. So about
Sure.
40%. About another 40% are over, and on average by about 20% right now. So they forecast
Mm.
an amount and they are over that amount and still growing. So
Mm.
we actually see the opposite in this space than kind of what you're describing there, and that's the realization of that coming into play in those data points. Is we actually see people say, "Hey, when you have 200 users, they have 400 users. They didn't want to tell us they had 200 users, and then they expanded to all 400 users." And we get to see that upside as they earn that trust. They don't come to the door and say, we have 400 users, we're going to deploy 200 first. They do the exact opposite. We earn that trust, and then it's it's greased lightning in terms of the tracks to get to the other 200 users and beyond. We've seen expansion beyond the sort of core focus of users into these sort of proxy groups of users, where now that they trust the platform, even though that user may not have been in scope originally at all, whether they told us about it or
Mhm.
not, they are expanding into that user base. So we see, uh, in terms of the upside in the user base, opportunity well beyond what we have line of sight into. We typically engage in the GRC side. If you look at an organization, anywhere from 40 to 60% of the total number of employees end up being in scope for our services, sometimes higher, sometimes a little lower, depending on how many of them are customer facing to some degree. And then on the sales intelligence side, it's the entirety of the revenue generating side of house, right? So again, you're looking at anywhere from about 25 to 40% of the total company headcount, depending on their maturity and their size as an organization, where we anticipate being able to penetrate, their environment. So pretty good upside versus what we see, but we see the reverse, right? And I think that's an interesting sort of situation to be in, where they say we have 100 users, it turns out they have 1,000, right? And that happens
Yeah,
more often
yeah.
than we like.
And then in terms of pricing model, yeah, how is this priced?
Look, we're dead simple. I think simple, you'll hear me say simple a lot. Like, simple, scalable, and reliable are so cliche, except we actually execute against them. So we use them. So we lean in on them, lean in on those three things hard. And it's through in everything that we do. Those three sort of tiers or pillars for us are injected in everything, in every decision we make. Simple goes to pricing as well. We have one price for everything that we do, a single user license, and we're not shy about saying it, is $30 per month per individual user. And as you get to larger teams, we block sell those licenses at discounts. And that's typically what ends up happening. We're in larger opportunities. But as an individual registered investment advisor, acting independently, maybe partnered with a broker dealer like Carofin, you could sign up today and it's a fiscally responsible decision. I mean, we're talking $30 a month to cover yourself from the risk against an SEC or FINRA audit. So we wanted that out of the gate. We wanted to be simple. There are no other providers in this space who provide a pricing model that fits in a single cell on a spreadsheet, right? There's always a matrix involved. And for us, that's just not necessary. We architected our platform to be able to align to a simple pricing structure like the $30 per seat that we're at today.
I definitely want to get into the offering and the current capital raise. One last question for you, kind of more on the business side. I'm just curious, privacy wise, you have access to every text message, I imagine, that's on this person's phone. How do you think
Nope.
about privacy?
No, we don't.
Mhm.
Some do. Some providers do. And again, this is where the engine room starts to show itself. We pass messages in real time, meaning that data from iMessage, which inherits the natural iMessage encryption technology, or from WhatsApp, the encryption technology embedded as a part of the design and architecture of WhatsApp, you inherit that when leveraging their platform, and that passes through our system in its entirety. We do not have access to any individual message anyone sends ever. We don't see them. They pass through our system and are processed, and metadata, which is so important to this being reliable, metadata is layered on top of that message as it passes through our system. So as we sort of observe this message go from point A and push it to point B, we layer on the metadata that makes it relevant to the endpoint that it goes to. But we do not have any access to the system. So in terms of privacy, security, look, I spent 15 years in cybersecurity. We are the only platform in our space that we would argue is not increasing the risk surface area of the CISOs out there in the large investment banks who are so concerned about third-party vendors. We're not that group because, again, we don't have access to the data as it passes through our platform. Others will sit on that data and batch process it. They have access to the text messages as they pass through the system, whereas we do not. So for us, it's all about processing and less about leveraging or observing and engaging that text message as it comes through. Because I don't want to see your text messages to your wife. I don't care. Like that's nothing that's going to ever be important to me. What I want to make sure happens is that text message either goes where it's supposed to go or it doesn't go anywhere because it's not supposed to.
Understood. No, I think that's a really smart approach. So let's dive into the offering that you guys currently have. You're doing a capital raise, it's in a debt structure. Can you talk a little bit about what that looks like and why you're doing the raise?
Yeah. Structure is fairly simple. So we're raising up to $2.5 million of 14% senior secured promissory notes. So this is a loan directly to SnippetSentry that will mature April 1st, 2027. The loan structure is that it is interest only through November to give the company more time to continue to ramp seats and obviously more capacity to repay the loan. And then what is a little bit unique about this is that the first $1.25 million comes with warrants that equal effectively 1% of the capitalization of the company. The way, I can, for people that are interested in diving in more, I'm happy to set up specific calls with folks. But the way to think about it is it's a sweetener for people to come into this debt round, sooner rather than later. And those warrants will provide, if the company is sold, additional value in addition to your 14% annualized return. So why did we take this on, having raised equity historically? Well, when we saw the ramp that the business has experienced over the past year from, call it, like Jeremiah said, like about 150 seats to now, approximately 13,000 contracted seats over 12 months, we thought it was prudent to provide a form of non-dilutive financing to the company that helps them continue to grow the functionality that their customers are requesting. So that was kind of the genesis of the offering.
It makes a lot of sense. Now, typically when you see a company doing a couple million in revenue, right, a lot of people can consider that still kind of early days. And with the level of growth you have, if you wanted to go raise equity, I feel like it certainly would be on the table. People would want to invest in this, right? Um, and just like, hey, we have something super valuable here. Why give away equity? Let's go non-dilutive and do the debt round, and we know we can cover it. Is that kind of the thinking there? It's
That
just,
was part of the
hey,
rationale, is let's get,
yeah,
by the time Snippet launches the Series B, that will be that further down the road, but it gets them capital in the near term that we think is a fair bet, considering the current return, and for those that have the option on the warrants, that it's a decent risk for a suitable investor to get yield out of their portfolio. So, we find that a lot of the investors that come to the Carofin platform, they are looking for yield out of their portfolio that's outside of the traditional bond markets. And so, as a firm, we've probably done, call it $500 million of private credit structures for various operating companies. And so we have, a growing stable of investors that are looking for yield out of deal flow that we bring. And this is, the flavor of the month, if you will.
So when we talk about yield, when will people start receiving payments back? Is there kind of a period you think in which you'll get all your principal and interest back by?
Well, so right, and so that is the structure that we put in place. So when investors are getting paid their 14%, day one, in terms of their monthly distributions. The loan is interest only for the first 6 months, and then it will begin to pay down principal, fully amortizing over the course of until April 1st, 2027, which at that point they will be fully redeemed, if everything goes to plan.
Got it. Understood. And in terms of minimum investment, what does that look like?
The minimum investment for this structure is 25,000. We've currently got 700,000 either invested in this loan or accepting commitments, and so we're out in fundraising mode and meeting new people and making new friends.
In terms of the warrants and when they would kick in, yeah, when would that happen, or how would that look?
So the warrants, really, I mean, investors would receive value from the warrants when the company is sold. So, we hope that's within the next 3 years. We obviously can't predict that, but you think of it kind of like an additional boost in value beyond the 14% that is, that's a decent return for most folks as well, particularly if it's diversified outside of the public markets.
Yeah, absolutely. In terms of your current capital stack, have you raised traditional venture? Has this been bootstrap? What does that look like?
How would we describe that, Jeremiah? I mean, we've raised we've raised equity for the company. There are no traditional VCs in the business. That will obviously likely change when the Series B is launched. But if you look within the $9 million of capital that we've raised at Carofin, it's individuals, many of whom come from financial services and understand this problem, inherently. But that has been, we've played that role of, professional investment, as a manager since 2022, when the CEO of the firm brought the company to us for a capital raise. And it's important to
Awesome.
note that, and that's for people that are learning about Carofin, your point that you made earlier is, we're that certainly doesn't, the issuers that we take on overwhelmingly come from us from pre-existing investor relationships that understand the value that we bring from a capital raising perspective. And so it's not like we're a platform where any issuer can put up a deal and see what shows up. These are companies that come to us from somebody that we know well. We run a full diligence process on them. That diligence file is available to all prospective investors that are contemplating investing. And that's really been, how we source our deals is people that we have done business with. So, in the case of Eddie Green, that's somebody that we've known since probably 2011, 2012. We've raised capital for another venture of his, and he has, I don't think it's out of turn to say that he's made a substantial amount of investments across our deal flow. The opportunity, he saw this opportunity that Jeremiah did a great job of outlining, and just realized that it was time to, I think he was in semi-retirement at the time, and saw that the problem was so huge that he really wanted to dedicate his resources to this company, to growing it into what we think it can be. And so it's been his sole focus for 3 years.
For folks who are listening, please enter some questions in the chat or the Q&A section, preferably in the Q&A section, and them in a couple of minutes. Couple more questions here. In terms of use of funds, where will this be applied?
Sure. So the use of proceeds, there is about $700,000 of existing, a former employee debt that we're paying back. And then the rest of that is used for working capital to further develop the functionality of the system. I'm assuming for use cases that their current customers are asking for, and then also to pay for proceeds for issuing the security.
Makes sense. And Jeremiah, thinking a little more on the use of funds, team structure today, what does that look like? And are you adding salespeople, core function? Are you adding, executive administrators to make sure you're taking care of those clients who are already onboarded? How do you think about where those dollars are going to go?
Yeah, this is that real growth fuel that this vehicle needs at the moment, and so you're going to see a heavy portion leveraged on the revenue side of house. Though the sales team specifically for the GRC product isn't likely to grow terribly, mostly due to our partner offerings and our partnerships in the space being so strong and growing at such a phenomenal rate. You'll see partners and channels growth a little bit on that side, and then post-sale activity. Our customer success team, we anticipate being the largest team on the revenue side for quite some time, as we really embrace the idea of scaled white glove treatment, and that's resonated really well with our buyers. The CS side, again, is going to continue to grow quite a bit. And then separate from that, we want to put some energy into the sales intelligence opportunity from a marketing perspective, brand awareness perspective on that side as well, because that is massive, again, upside beyond the very well-established brand we've built on the GRC side. So you're going to see, sort of a diversified set of actions take place, all revenue oriented with the bulk of the funds.
You see a path to profitability here in the next kind of 24 months, or are you kind of leaning heavily into growth and okay with burn?
We do see a path to profitability. We actually have it forecast for the middle of the year. We reach profitability at about 16,000 or so seats on the platform. We've got about 11,500, 11,800 on the platform today. We've gotten commitments in the last 2 weeks for another 2,450 going into the platform, and we're going to wrap up this quarter strong with a massive partnership that we secured about 2 weeks ago that I can't speak to the name of until the PR hits. But the path to profitability is right in front of us, and we aim to hit that by mid-year.
Terrific. Couple of questions that have come in. How is this debt offering collateralized?
Well, it's the senior indebtedness of the company, so they have claim on all the assets of the business. So, and it's part of why we're refinancing some of the existing shareholder debt.
Great. This individual is asking, how many clients do you currently have? I know you hit on how many seats, but how many clients does that represent?
We're in the triple digits and growing. And I can say that specifically. I can get more specifically behind an NDA, obviously, but I will say that we have grown from 3 in January of last year to this triple digit mark. And with the partnership side now gaining full steam, having established itself for about a year and recording some real partnerships that are of meaningful size globally, we anticipate blowing by that into the 4 digits in the next 8 months. So if you see our forecast, that'll all make sense.
Next question here. How long are the sales cycles on each one of these? And what do you think about larger clients versus smaller clients and sales cycles?
We're averaging about 92 days. So a full quarter sales cycle is what we're seeing today. Blended average across our client base, and we can display all this for everybody. But blended average across our client base, average deal size right now is about 215 seats. Obviously, we've got some that are very, very large, well beyond that, and some that are smaller. We have I hesitate to call it a freemium model because that's not really what it is. It's the only sort of product first, product led growth, if you're into that sort of commentary. The PLG motion that we have in place is aimed at, well, really any user, but the lower end of the market, those individual registered investment advisors who are out there with no solution that's economically sort of feasible for them, come in and get signed up in our platform and can get started today. And so we've been building that mechanism for quite a while, and it's gained traction on the lower end of the market. Mid-market, we've got our hands wrapped around pretty quickly. As you move into the enterprise, where we say that's 7,500 seats to 100,000 seats, we're leaning in heavily on partners to reduce the sales cycle. Those were 12 months plus to get into a Bank of America, Wells Fargo, and beyond. And so as you look at those, the partners were able to piggyback that long evaluation process that they've gone through to get our contracts in place with a limited amount of sales time required. So our time to money is pretty solid on those. But 91 to 92 days, I think right now is what we're at blended average on our clients.
This next question is for Nash. Nash, how do you guys process payments through the Carofin platform back to investors?
Through our administrative agent. So we have a staff that is dedicated in doing that. Are you talking about like in terms of wire, ACH, or yeah?
I think it's a little bit of both. Like, does it go directly back into your account on the platform? Does it go to your bank account? Is
It
it done
goes
on a monthly
to,
basis?
yeah, absolutely. So well, it's on whatever cadence the security structure demands. In this case, this is a monthly repayment. And so I'll give you an example. I mean, I invest in these deals through a self-directed IRA, and so my account is set up not through Carofin, but I have it on. Well, actually, I have a couple with different providers, and capital goes from those accounts into our the issuer that I designate, and as capital is returned, it goes back into my self-directed IRA. But it just depends on whatever investment vehicle investors are using. That could be an LLC, that could be a solo 401k. We work with most of the major providers on the self-directed side, and through a variety of different account forms. Yeah.
One more question for you. What is the fee structure of Carofin? Am I paying a transaction fee, or does the issuer pay the transaction
Great
fee?
question. So in this case, in every case, the issuer is paying the fee. So the 14% is net to investors. We're paid in this case a 5% cash fee on a success fee basis, and the 14% is net to investors.
Are there any hurdles to continue scaling at this pace with your current resources? And I'll give that to Jeremiah.
With the current resources, yeah, and that's the good problem. That's the problem a guy in my seat always wants to have, is the one where we're scaling beyond our current resources. We do have the tools in place to continue for quite a bit, in the headcount in place to continue for quite a bit here, at least into profitability in that range. But the resources that we're out here seeking are very intentionally about ensuring we don't have to slow the scale that we're chasing at the moment. And again, the momentum's great on the GRC side, and we're picking up momentum on the sales intelligence side. So as those two things start to converge, and you're realizing the outcome of some of these high profile partnerships and the opportunities those present, we better be ready. And these resources, again, are going to support that.
You talk about an acquisition in the not too distant future. It sounds like within 3 to 5 years. With that in mind, who would be the strategic acquirers of a business like this?
What do you think, Jeremiah?
Uh, we have been getting this ask, meaning called "Can we acquire you?" Right now, it's happening about every 2 weeks. We made a good name for ourselves in space, and so I say that with no ego, just to say we're getting that call, so we know exactly who's going to call us. There are really two different types of groups who are expressing sincere interest in what we do, and we think can actually pay the tab on what we'd be asking. large private equity, and that could be acting as a roll-up or otherwise. There are plenty of players in this space in terms of private equity investors who are looking to continue the growth that they've been realizing, or return they've been realizing for years out of the archives and the archive providers, other SaaS platforms in this space that we partner with. And they want to bolt on a service like ours to make those customers stickier and increase revenue opportunity, all the good things that you would expect. So on the GRC side, big PE firms who are already playing around in the GRC space. And then as we grow beyond that to sales intelligence and beyond, we're looking at you, Salesforce, and HubSpot, and others in that space who very clearly see this as a data point they have not otherwise been able to, ascertain at this, up until this point. That's a huge value add for their clients. So we've got a pretty wide net, I think, we can cast in terms of the acquisition and exit opportunity with those who have demonstrated they can pay the bill, and they make acquisitions that are strategic in nature, like this would be.
You see doing another debt round within the next 2 or 3 years, and re-upping, or if there is an equity round, would you consider allowing your debt investors an opportunity to partake and invest?
I would hope the latter.
Yeah.
We'll see. The future's bright for this company. Obviously, nothing's guaranteed. It has been a thrill to be involved with this company over the past 3 years. And that will be a strategic decision that we make down the road. But right now, we're putting more gas in the tank in a way that we think is prudent, and we think is a fair bet for investors that are, able to allocate a very modest portion of their discretionary capital.
When does the offering end?
Let me get back to you on that. I'd have to
Yeah,
look
no
that up
problem.
real quick. Apologies. I mean, my assumption is that this gets wrapped in the next 30 days. For people that are seriously considering an investment, I will make myself available to answer any questions. We obviously got a head start on this a couple weeks ago, but we think this will be wrapped in the next 30 days or so. And with that, we want people that are considering this to, have as much information as they need to make a rational decision. We can certainly earmark amounts of capital just to get a sense of what the book looks like of interest. Chris will share my information, my email, and people can look me up on LinkedIn for, further questions if they want to, or they can text me. That's also on the table as well.
Terrific. I do have one individual who is using the moniker BFG and does want to reach out. It sounds like they may be an institutional investor. You've dropped your email in, but without a .com or .co or I just want to make sure we actually have the right one. So if you don't mind adding into the Q&A, whether your email is a .com or a .co, that would be helpful. All right, let's see if we have any other questions from the crowd. And if not, we can wrap here. Okay, yeah, we got a .com. So Nash, I will send you this email of an individual who would like to reach out and chat with you. Jeremiah, Nash, any last words before we wrap here at the 45 mark?
Nash?
One, Chris, I'm thrilled we got to do this. Thrilled you're in North Carolina now. Summers might be a little bit more brutal, but the winters are better. Congrats on the platform that you built over the years. It's just really proud of what you've done, and thank you for including us. This is obviously a really exciting offering to talk about, given our closeness with the company. And, again, I'm happy to have conversations with prospective investors, moving forward.
Awesome. Jeremiah?
I'll just say this. I've been 0 to 50 million 8 times in 20 years, a couple of flameouts in there in between. And it's not as often as anybody in this space wants, where you get all the right ingredients all together, all at the right time. It's kind of that moment where you say, making your way to the world championship is like the most painful thing the first time that you're ever going to experience, because it's either the only thing you're ever going to think about for the rest of your life if you lose it, or the only thing you're ever going to want to do again if you win it. When you see success in this space, it's all you want to get back to again. And I couldn't be more excited about all the ingredients we have here to get back to where I've been before in past lives with the acquisitions and the exits that we've seen. So equally as excited, having been an insider here as a CRO, about what we've got, but not just because of the the product, but because of the team and all of the other sort of opportunities, timing that are aligning for us right now. So we welcome everybody on board.
And I, listen, why we love covering opportunities like this is for the very real fact that diversification is super important, right? And that opportunity to do the long-term equity holds is great, but diversifying your portfolio with near-term liquidity where you're making 14% and maybe have a kicker upside with the warrants, that's really meaningful, right? And I think that's really important. It doesn't make sense for every deal, especially high burning machines, right? But this is not one of those. You have a great opportunity to invest in, I think, a really interesting structure, and provide yourself some of that near-term liquidity. And frankly, I would say this is very uncorrelated to the stock market, right, where there's a lot of volatility right now. So I just think it's a very interesting play. Obviously, do your own homework. But if you want to check them out, carofin.com. We'll be sending the video out later this evening, a link to go to Carofin and check out the offering that's currently live. And then, of course, you can reach out to Nash as well, and we'll get his contact info in there for folks who are interested in connecting with him too, to dive deeper on this offering. But thank you, everyone, for your time, for your thoughtful questions, and we hope you have a wonderful day. Thanks, Nash. Thanks, Jeremiah. Appreciate it. And congrats.
Great to be with you.
Thank you.
Take care.
Take care.